How Iran's response to this latest round of attacks will affect oil prices. Next on the Energy News Beat Daily Stand-Up.
What will happen to the Strait of Hormuz and oil, Iran's threat to its global impact? What will Iran retaliate if the United States strikes after their strikes on the nuclear program? Michael, here are the key bullet points. No leaks, total secrecy. Boy, that was phenomenal. Side note, no Democrats were notified before the execution of Operation Midnight Hammer. Holy smokes. Operation Midnight Hammer was meticulously planned. High U.S. risk military strike that inflicted significant damage on the nuclear facilities. It had 14 GBU 57 MOPs, big boy bombs, 24 Tomahawk missiles, and it marked a historic deployment of B-2 bombers and showcased the strike capacity. They don't know how the damage turned out so far, but the operation highlighted regional tensions. The B-2 bombers going to Guam did two things, Michael. It kept people guessing, but it also let China know that they're pre-positioning assets in case they attack Taiwan, and that was huge. On this, I put an unconfirmed photo of holy cow Batman moment of when one of those sites was attacked. Got some initial bomb things. But what I want to point out from an oil and gas perspective is the LNG flow and the Iranians. How are they going to respond? Michael, 90% of the Iranians' budget comes from their own oil that they ship to their primary customer, China. However, the Strait of Hormuz is also 20% of the world's oil flows through that strait, which is important to Oman, United Arab Emirates, and all of the other countries in the If it is shut down, we are going to have a significant world problem as far as finances go. So now the Iranian Congress agreed to go ahead and shut it down. But will they? They've threatened it 15 times in the past. This time, I don't know that they're going to. If they've only got rubber boats and rubber duck floaties, I don't know that they can.
Yeah, I'm a little bit with you on the standpoint of it's almost like breaking your foot to spite your broken arm. With the standpoint of, if they close the Strait of Hormuz, it's going to make them infinitely more difficult for them to actually get their oil, like you said, to China. Now, obviously, there are some things that they can do in the interim that can maybe stave that off. But, I think you brought up the accurate point that I would say they have threatened this in the past, and I don't think are actually going to follow through with it, because I think if they do follow through with it, it starts a chain reaction that begins really difficult to unwind. Yeah. And I think that was the game theory that Trump and, we saw the crew of them last night in the special address. You had Hegseth, Rubio, and Vance behind him. I think the game theory throughout the Trump administration that they're playing out is, we'll take these strikes. Iran won't go to closing the Strait of Hormuz because they understand that closing the Strait of Hormuz will go ahead and cut off their money flows, but also trigger a response from us, which then triggers another response to them and goes down in a spiral, sort of a spiral downward. And I think Iran deep down knows they're not going to win anything. Now, this is also extremely unnerving from the standpoint of we may, and I hope I'm wrong, but we may end up, if this ends up being a Franz Ferdinand style demarcation in the sand, which drags us into another global conflict, I think we'll look back on Saturday with, a lot more questions than I think we do now. I think, like you said, the reports coming out is this was as soft of a plan as we could have done in order to get these enrichment facilities. I mean, who knows if how close they actually were to a bomb. We've been hearing for 20 years that Iran was 3 weeks away from a bomb. So, there's a little part of me that is,
I'm skeptical.
But there's a little part of me that says, listen, isn't this the same playbook they ran in 2004? They just dusted it off. They're just dusting off the same weapons of mass destruction playbook to get us again? I don't know. But point of the matter is, I don't think they're going to close the Strait of Hormuz. I don't think we're going to see $100 oil. And if they do close it, I mean, it's going to be unbelievable. I mean, we'll know here very shortly. Here, the market's going to open very
Exactly.
soon.
But what I think that they will do is the three tankers that happened in the last 2 weeks that were caught on fire were from accidents from Jeep's interference that Iran was conducting on the side. So the tankers ran in and collided with each other. So they are still doing Jeep spoofing, doping, and zombieing of tankers because they're avoiding sanctions. So it is a real problem right through there.
Well, and I mean, let's dig into it just a little bit. So you've got about 20 million barrels of crude oil flow through that choke point every single day, which accounts for somewhere around 20% of the world's global consumption and about a third of the world's LNG. You have to think about this, Stu. Saudi Arabia, Iraq, UAE, Kuwait, Qatar, Iran rely on that strait to get their gas to market, and particularly the gas and the oil that flows to Asia, China, basically Asia, which includes China, India, Japan, South Korea, account for 67% of the strait's crude oil flows. And I think what China is probably back channeling to Iran right now to say, don't close this bad boy. Please don't. And I think they are probably signaling, we will support you in any way possible if you do not close this strait, because it affects them more than anything. I mean, 47% of all Iran's seaborne crude ends up in China.
There's only two things that really matter here. China has had three things. China has had three major military airlift machines in Tehran in the last week. Were they taking things out or were they dropping off? Kind of like Ghostbusters. And then you have, Russia help out Iran? But I think that there is a gentleman's agreement between President Trump and President Putin, him saying, go take care of Ukraine and finish your business there and get a peace deal there. And President Trump is over here. So I don't think Russia is going to step in. But when we take a look at what the Iranian outgoing, and if the people rise up and they're tired of this horrible regime leading Iran, this is where if they want to go out and destroy any potential, they may be the ones to take out the strait. Not because of that. If they think they're on their way out and they just want to make it miserable for people, I think that may happen. Makes sense?
I think the game theory is very interesting. We will know very quickly, and it's going to have a reverberation on the economy. Let's jump to this next one here.
Banks drop the climate pretense and follow the money, a shift back to fossil fuels. Michael, this one was really a fun one to write. And you take a look at the global energy landscape is undergoing a seismic shift, and major banks are making their moves clear. They want money back. They are a for business profit. J.P. Morgan, Chase, Bank of America, and Citigroup are doubling down on the fossil fuel investments, prioritizing profits over climate pledges, according to the 2024 Banking on Climate Chaos report. Michael, they put in a $162 billion increase from 2023. This is critical. It's still short of the trillions that we need in order to meet just regular decline curves. However, this is a significant difference to the stories that we've had in the past. And I've got an interview that I'm getting lined up with the Bank of Oklahoma Senior Vice President of Investment for Oil and Gas Investing. He's going to be coming on the podcast real soon to be talking about this. So why the pivot? It's in economics. You got to be able to give money back. And in renewable energy, they're going broke because they're not renewable, they're not sustainable, and we're going to need oil. So this is a really huge one. But Michael, the EU, the European oil and gas, big oil, you have talked about this, you and I have talked about this. They've started going back to their basics and going back to oil and gas. But will the European banks follow the U.S. banks? I don't think so, because they're making money off carbon credits, carbon taxes, they're still in that rift range. So they're going to be behind the U.S. banks.
No, they're definitely going to be behind. And I think the part that I think you accurately put in this article is not only the shift from climate solar, wind, especially with these tax credits going out to oil and gas, but specifically the private oil and gas operators. That's where the capital is flowing right now. The capital is not flowing per se into the public companies. I mean, capital is not rushing into the oil business, at least over the last 6 months, because of the overall, what was the stated goal of the administration of $55 oil. But then they decided to get involved with Iran, and now all of a sudden oil's back up. There's some interesting stuff going on. Point of the matter is that even the capital that was flowing prior to this geopolitical craziness stuff, and I think what you have to do as an investor is you have to basically look at it from two angles. You have to look at the fundamentals and understand the geopolitics, because if Iran just rolls over, well, guess what? Oil is going to go back down to 65, back down to 60, because there's just that geopolitical premium baked in there. It's one of the reasons why listening to this show, I'm biased, but is so critical, because we break down and try to overview the difference of what's going on geopolitically that's going to affect oil and gas, but also then understanding that that the fundamentals are going on. The market is oversupplied right now. And the fact that Iran and Israel and the US are launching bombs at each other doesn't change the fact that we're in an oversupplied market. So what does that mean? It means that if you go back and look at where the capital is flowing, even in an oversupplied market, it'll tell you what the overall broader capital markets believe. And this goes back to my point of the capital was flowing, but it was flowing into the private oil and gas companies. I just saw today we're not going to cover it, but ExxonMobil had an opportunity to get a $1 billion investment from TPC Capital. I'll pull it up here, but point of that, but it was a 4% under their current stock price, and they rejected it. Now,
wow,
it's under their stock price. Why would you go ahead and accept that special offering, even if it was below your stock price? But it goes to show you where investors who do this for a living, professional investors, think of public equities. They think public equities are overvalued and felt like there was an opportunity to come in and get a stock for a slightly less premium. Okay? So yep. I think what you accurately pointed out in this is that what the banks are showing is that, hey, we're out on climate change and we're trying to move back into what's being profitable. And when you look at where that money is flowing, to be honest, in the last 3 months, we've seen 3 or 4 different oil and gas companies spring up funded by private equity. I mean, there's not a dearth of capital out there. It's the capital's being a little bit smarter about where it's going. So I think these are great articles. So I highly recommend everybody checking it out.
Hey, let's roll the next one here. Governor Abbott signs SB 6 to bolster Texas grid reliability, a win for business, growth, and investors in Texas. Way to go, Governor Abbott. This original article was on David Blackman's 4, but I took the information and then rewrote it for Energy Newsbeat. And I love David Blackman. He really kicked off the ideas theme in here. The oversight of large energy consumers, SB 6 grants ERCOT the authority to monitor and during emergencies disconnect power to large consumers using at least 75 megawatts. Michael, this is critical because it means that microgrids become very important and people are going to want their own generators. They're going to want their own backup and they're going to want to have their own direct natural gas pipelines to that business. Bing! This is huge. Voluntary load reduction program, regulation behind the meter generation. This is definitely needed and it is well done. And so when you take a look at data center, grid, microgrids, how it's going to handle, way to go, Texas. I've been reviewing all the states, and there's only a handful, Michael, of states that I would put a business in right now.
Yeah, absolutely. I mean, to be honest, this is probably, 2 years too late. Now, one thing that's nice about why I love Texas, why I live here, is that they're able to admit when they're wrong and take steps forward to rectifying. There's nothing worse than somebody who knows their opinion is wrong, but just digs their heels in because they don't like to be wrong. They don't like to, it's just a side note. I hate when somebody says, well, I've had the same position for 20 years. Oh, so you haven't learned anything in 20 years is the first thing I think. I don't think, oh, you're consistent. I think, oh, you don't learn anything because trust me, facts have changed over 20 years. So, yes, this should have happened 4 years ago, 3 years ago.
Right.
It wasn't like these grid reliability issues in Texas were unknown. They were exacerbated by the freeze that happened back, I think it was 2021 or 2022.
Right.
But hats off to Greg Abbott, the Congress and the local state governments here in Texas for understanding it, making the investments, but also doing it smart. Okay.
Yes.
Doing it in a way, like you said, that's actually going to be reliable going forward, and investing in, like you said, backup power systems, much bigger oversight of, these large energy sources. I mean, the one downside, I'm interesting. I'm either all or nothing. I think either the government needs to control 100% of an industry or control none of it. This little, we're going to do 75%, we're going to have this, we're going to have that. No. And, maybe I'm biased, but coming from Colorado, our electrical system works pretty well. And guess what? It's 1,000% regulated by the government. The government tells Xcel Energy, tells all of these local municipalities, here's the exact profit margin you can make, and here's how much you need to invest in keeping the grid up. And guess what? We don't lose power when it goes to 30%. Texas has always seemed a little strange to me. A lot of this goes back to the three word or the couple letters nobody wants to hear of Enron and their massive lobbying for deregulation. Why did they want deregulation? To make money. And that's why, yes, deregulation makes money for is a great way to stimulate from a capitalist side, but there becomes this weird give and take then when, okay, now all of a sudden there are certain industries that you could argue shouldn't be deregulated. And the problem is you have to argue each of those individually, and each of those must stand on their own. Point of the matter is this oversight of these larger energy consumptions that SB 6 grants, I think is a good thing. And I think we need to keep moving towards more regulation of the electrical grid, because there are externalities that go far beyond just price. And sometimes a money motive doesn't solve the negative externalities. I think the other thing that you talked about in this article is great, the backup power. Stu, you were telling me 3 days ago your backup power and you lost power, and all of a sudden your backup battery kicked in right away. You were down for about 5 minutes. I love the voluntary load reduction programs, which basically allows using more smart grids. That's basically what it is. You load up a smart grid on your large warehouse, help save money. It's great. And then this behind the meter generation is great. So I think all in all, this is a great bill. Probably 2 years too late, but I'm in favor of just getting things right and moving on versus trying to be like, we had the same views 20 years ago.
Oh, yeah. The only one that has been true to his roots is Bernie Sanders. He's been a communist all those years, and I got to hand it to him. He is consistent. Homely as all get out, but he's consistent. Let's go to the next story. Has net zero caught up to the UK's Don Quixote green energy dream? They're now reconsidering, Michael, North Sea oil amid an energy crisis. Holy smokes, Batman. Has net zero's ambitious dream colliding with the harsh realities of energy security and affordability? Michael, you can't have a poster child for stupid energy policies more than you can Germany, the UK, New York, New Jersey, Delaware, Hawaii, and California. Holy smokes, Batman. This one is fantastic. The policy suggests the UK may be recalibrating its approach with projects like Rosebank and Jackdaw back on the table. Is Ed Miliband's career in jeopardy? This man needs to really, instead of being the leader of their energy policies in the UK, Ed Miliband needs to be, I think, a fill-in for what's called Wallace and Gromit. If you ever remember the show, Wallace and Gromit, they were clay puppets, and he looks just like he belongs in that clay puppet rather than being a leader of the environmental seas. The North Sea licenses granted in 2022, the group alleged that the government ignored expert advice on environmental impacts. They sued, and then the government allowed all of these suits to come into the net zero, and they were shutting and forcing all oil companies to quit producing in the North Sea. Norway is about to shut off their inter-country grid connect coming up in 2026, 2027 when it comes due. People hate grid interconnects, and the UK is on a 2-year toe tag, if you would, for energy.
No, I mean, we've covered it ad nauseum here. The UK is going down I don't know what's happened to them, unfortunately. I mean, and I think
It's
what's
not
going
good.
to crush them is when all their energy companies leave. I mean, BP's on the brink of either moving to the United States from a relisting, or they're about to get broken up and sold for parts. Shell, I guarantee you, within 3 years is out of there, and then they're going to end up with basically. I mean, they're going to basically go back to 1800s. I mean, it's unbelievable what's going on there.
Yeah, they'll be burning peat moss again.
Yeah, they're gonna have a bunch of their entire
Oh,
grid is going to be hamsters on treadmills losing their mind.
biofuels from the US. They could take wood pellets, put them on a ship, and then carry them over all the way to the pond, and then put them back into the. That's been done. One of the largest shipping for biofuels is the United States shipping to the UK. You can't buy this. Anyway, it was a fun day.
It was a fun day, guys. All right, let's jump over and quickly cover the oil and gas markets. Before we do that, let's pay the bills. As always, guys, all the stories and analysis you heard is available energynewsbeat.com. Stu and team do a great job keeping that website up to speed. Hit the links in the description below for all timestamps, links to the articles. You can also sign up and subscribe to our Substack, theenergynewsbeat.substack.com. Probably the best place to stay up to speed with our daily analysis of the markets. We write articles that you can only find on our Substack there. Highly consider signing for that. It's a great way to support the show. We also would ask you to consider signing up for a paid subscription. You get a bunch of custom content, mainly a bunch of research content by myself. You get to take part in our chat community, which always has some great stuff going on there. You get access to our monthly State of the Energy Union. We will be recording that on Friday and releasing to our paid only subscribers. So if you want, we do a quarterly one for free, but every month, if you're a paid subscriber, you get that straight to your inbox. So please, guys, check that out. theenergynewsbeat.substack.com. Also, shout out friends of the show, Reese Energy Consulting. Thank you for making the show possible, guys. If you are in the midstream or upstream space and you need it all, advice, help, outsource team in the midstream space, Reese Energy Consulting should be your go-to team. They work and have clients of all sizes, ranging from 2 guys in a garage or 2 guys in a podcast studio, all the way up to the largest publicly traded companies in the world. That's reeseenergyconsulting.com. Please let them check them out and tell them that Energy News Beat sent you. Finally, guys, if you are in need of power, check us out. We are proud to be sponsoring with Turning Black Gold into Green. If you guys are in the data center space, you're in the hospital, a large business game, and you need backup generation or you need a new natural gas generator, check us out. The link will be in the description below. Sign up. We can get you connected to help sell and get you a natural gas generator so that you don't lose power. You know, if you're in the data center space, if you're and anywhere near where one of Stu's places in Abilene, I promise you're going to need a few of these. So check this out. We'll get you hooked up with good friend of the show, Mark Lancaster. And finally, guys, if you're considering adding oil and gas to your portfolio, go to investinoil.energynewsbeat.com or hit the link in the description below. We have a great portfolio survey. Fill it out. It'll give us an idea of where you are in your oil and gas investing journey. And then depending on your answers, we will get you a bunch of information and point you in the right direction. That's investinoil.energynewsbeat.com. You know, Friday, Stu, from an indices standpoint, a lot of red. S&P 500 down 0.2 percentage points. NASDAQ down 0.4 percentage points. 2 and 10-year yields down 0.8 and 0.3 of a percentage point, respectively. Dollar index flat. Bitcoin down below 100,000, down 3.3 percentage points this weekend, currently trading 98,770. It clearly doesn't like war. Crude oil jumped about 0.4 of a percentage point. Brent oil is up about a percentage point, 73.84 for WTI, 77.22 for Brent. Natural gas, $3.84. It dropped about 3.5 percentage points yesterday. XOP, which is our E&P securities contract, was up about 0.5 of a percentage point. I mean, choppy week from the standpoint of, I'm obviously we were up on the week. We settled a little bit lower than I think people expected, mainly on the fact that there's obviously the 2 geopolitical items that are going on right now. Bombs flying in Russia or in Iran and in Israel. and we still have a little bit of a hangover from the tariffs. And those are the two kind of news items that are sort of at tension odds right now, driving the short-term view on oil. As I mentioned, over the long term, we're still oversupplied. You can't change that fact overnight. OPEC Plus is still unwinding their cuts. They've said they're going to continue to do that. So the real question is, over the short term, what happens geopolitically? It's why you tune into Energy Newsbeat to balance those two things. Other things that happened in the EU decided to abandon the proposal that would lower the Russian oil price cap. They must be listening to the show, Stu, because that's something we've been saying for weeks now. So it's nice that the EU and Brussels is listening to us. I think it's going to be very interesting to see a lot of where this stuff goes, specifically on the geopolitical point. We did see rig counts drop by 4, so we continue to shed rigs. Stu, you had a great article on Newsbeat about that, which kind of puts it in global context. And we also saw frac count spread actually stay steady week over week, which is a little bit fascinating. Now we're sitting at 182 frac rigs running right now. We're about a 555 rigs. So there still is a huge delta there. But again, guys, things are getting pretty frothy out there, Stu. Not much on the finance front. I think everybody is kind of wait and see right now, Stu, a little bit with what's going on geopolitically. I think that's what's captured most of people's attention right now, but there's definitely some things on our radar that we're paying attention to that, as quote unquote journalists, we're not quite ready to release yet, but the rumor mill is hot, Stu. My favorite segment of the week, what are you thinking about this week? What's your prediction? And really, what are you worried about this week? Am I going to get drafted? Is that what I should be worried about?
No, my concern are two things. I put this in the Substack article this morning, and that is, what is going to be Iran's reaction? Is it going to be the leadership stepping down? I don't think so. Is it going to be false flags from our own government, the agencies that President Trump does not have control over? Is it going to be sleeper cells in the United States that of Iranians that are here when the Ayatollah says, or the supreme leader says, go attack somebody? I don't know. But what I do know is how goes Iran goes the rest of the week.
No, it's really true. I think as we sit here at Friday, it's going to be very interesting. Like I said, guys, sign up for our paid Substack. We're going to be recording our monthly State of the Energy Union, available only for our paid Substack subscribers. So I highly recommend signing up for a subscription there so you can stay up to speed with that. But with that, Stu, I think we're going to let out of here. Get people, start your Monday. Hopefully it's a good one. We appreciate everybody checking us out here. EnergyNewsbeat.com. For Stuart Turley, I'm Michael Tanner. We'll see you tomorrow, folks.